Good afternoon and welcome to a webinar with Power Finance Corporation hosted by IndiaBonds. Uh, my name is Vishal Goenka. I'm co-founder of IndiaBonds. To all our clients, you would have seen us before. It's always an effort for us or our initiative to connect our clients with large companies to talk about fixed income investment. And we're truly honored and thankful to Power Finance Corporation for this opportunity. We had hosted them 2 years ago as well when they did the public issue. And really it is the what I really appreciate is that the recognition that the mass investors in the country really value when companies talk to them directly. Power Finance is a Maharatna of Indian government. There are only 12 to 13 national large institutions which are considered like that. There are listed equity with a current market cap of 1,22,000 crores, $13.5 billion, uh, which is quite amazing. A leading power and infrastructure financing company set up way back in the 1980s, and someone who has AAA rating from all rating agencies for the longest time I've been in the market and maintains that. And this is like a rare opportunity with their offering, which we are going to talk more about, and especially the 10 to 15 year, given where the bond yields are. I think it's a rare opportunity for investors to capitalize on that. We'll run a short video which the PFC management has asked us to, and we hope the CMD joins us by then to address the audience.
Power Finance Corporation, a Government of India enterprise and the country's largest NBFC group. PFC carries a legacy of trust 40 years strong. We energize dreams. We enable change from generation to transmission and distribution. We power the entire energy ecosystem, propelling India toward its vision of Viksit Bharat. Our growth has mirrored India's ambitions step by step, building scale, strength, and leadership. To further drive India's growth, in 2023, we forayed into infrastructure and logistics sector as well. Today, our loan book has proudly crossed 5 trillion rupees. But we don't just give loans, we invest in transformation. With India's largest green loan book and over 63 gigawatt of renewable capacity supported, we are among the leading agencies to drive the clean energy transition in India. For us, sustainability isn't a buzzword, it's a responsibility. PFC provides the capital that moves India forward. We are now stepping onto the global stage through IFSC Gift City Gujarat, building trust as a dependable energy partner. With highest domestic credit rating of AAA and an international rating at par with sovereign rating, empower us to access funds globally. We have created long-standing collaborations with leading institutions like JBIC, SACHE and KFW. From 33rd rank in the Fortune 500 India list for 2025 to many other awards and accolades, PFC continues to grow with purpose, credibility and global trust.
Thank you for that video. As mentioned, we are very thankful for Power Finance Corporation to come and speak to retail investors in the country and reach out to at least over 4 lakh investors that India Bonds has. We had the privilege to host Ms. Chopra 2 years ago. And let me now introduce the CMD, Ms. Parminder Chopra, is the chairman and managing director of Power Finance Corporation with over 37 years of experience across the power and financial sectors. She leads PFC's strategic vision and drives its growth and transformation initiatives. And I will tell you, is always very approachable to the mass retail investor base, both in equity and debt, and very thankful to having her here. I would also like to introduce Shri Sandeep Kumar, who's been serving as Director of Finance of PFC since July 2024 and brings over 35 years of rich experience in finance and the power sector. So without further ado, I will pass the floor to Ms. Chopra to welcome the audience, followed by a presentation by the company regarding the public debt bond issue offering. And then we'll open to Q&A, which you can type in the Q&A and the chat, which will be asking the management of PFC. Ms. Chopra, welcome, and over to you.
Thank you. Thank you very much. Good afternoon and a warm welcome to all of you. It's a pleasure to have you with us today as we come together for the PFC's third public issue of bonds, which is an important opportunity for the investors across the country. Over the years, PFC has earned the trust of the investing community through consistency, prudence, and performance. In the last 5 years alone, our 2 public bond issues mobilized 7,000 crores, with each of the issues subscribed more than 5 times. The response is not incidental. It reflects deep and sustained confidence in PFC's financial strength, governance, and purpose. As India's largest AAA rated NBFC in the power sector, PFC is a long-term partner in nation building. Every rupee invested with us supports the creation of reliable power infrastructure, power that lights homes, fuel industries, and enables economic growth of the country. Our journey is closely aligned with the national aspiration of Viksit Bharat 2047. A resilient and future-ready power sector is fundamental to achieving this vision, and PFC continues to serve as a key financial pillar supporting this transformation. India's power sector is at a crucial stage of development. The transition towards renewable energy, battery storage, and planned expansion in nuclear capacity, with national targets of 500 gigawatt of renewable energy by 2030 and 100 gigawatt of nuclear capacity in the years ahead, India's ambition is clear. Today, our installed capacity stands at 510 gigawatt, with 250 gigawatt already from renewable sources. PFC is deeply embedded in this growth story. Our financial strength provides a strong foundation for investors' confidence. We supported near 50% of India's installed power capacity. Our loan book stands at 5,61,000 crores as on 30th of September 2025. We recorded a profit of rupees 8,963 crores in the first half of the current financial year. Our net worth is at 97,525 crores. And our capital adequacy ratio is comfortable at 21.62%. These are not merely numbers. They are indicators of resilience, disciplined risk management, and a sustained long-term business model. This public issue is our invitation to investors, particularly retail investors, to participate in journey of India growth. This issue also carries important firsts. India's first public issue of zero coupon bond and the first public sector undertaking public issue bond of both the current financial year as well as the current calendar. We are offering maturities with option of 5-year, 10-year, and 15-year, enabling investors to align their investment with their financial goals. The zero coupon bonds are notified by CBDT and offer simplicity and certainty, a single investment today that nearly doubles over a period of 10 years, with tax benefit at maturity as per applicable tax rates under the capital gain tax. No TDS would be deducted on zero coupon bonds. For investors with longer horizon, the cumulative option provides the strength of compounding with the potential to nearly triple the investment over 15 years under another option. In a time when investors seek safety, transparency, and predictable returns, this public issue offers a comprehensive package. Before I conclude, I would like to place on record my sincere appreciation for the continued trust and support extended by our investors, arrangers, brokers, and stakeholders. Your participation in our 54 EC bond issuances has been invaluable, and we look forward to your continued association in making this public issue a success. I also wish to thank our arrangers and the entire team of PFC for their commitment and dedication. To take the webinar further, PFC team led by Director Finance will now be making a corporate presentation and will address your queries about the issuances, if any. Thank you for joining us today. Thank you.
Thank you, Ms. Chopra. As always, very direct and honest to the investors. Really fascinated to hear about the zero coupon CBDT clearance you have. It's very innovative. You've not seen that as such. So thank you for your time. And I invite Mr. Sandeep Kumar to please take over on the corporate presentation. Thank you.
May I request Shraddha first or Tabassum to take a lead for corporate presentation. Then we will reach to our Director of Finance for further discussion. Over to Tabassum, our CGM Finance heading this public issue vertical.
Good afternoon, everyone. Respected Director of Finance, sir, Mr. Sandeep Kumar, our Executive Director, Mr. Rajesh Agarwal, and all the distinguished arrangers and broker community joining us today. Once again, a very warm welcome and very good afternoon to all of you. My name is Tabassum, and I am Chief General Manager Finance in PFC, looking after the public issue vertical. As we initiate this public issue, it is my absolute pleasure to present the overview of our company. Today, I will take you through our corporate presentation outlining the company's journey, nature of our operations, and some of our key financials. I will also share key highlights about our upcoming bond issuance. So PFC's journey began in 1986 as a company dedicated to power sector lending. During the last 40 years, we have achieved many milestones, and here I would like to quote a few. We were registered as an NBFC in 1998, and subsequently we were categorized as an infrastructure finance company, IFC, in 2010. In 2019, we acquired 52.63% stake in Rural Electrification Corporation, REC, and we became its holding company. In 2021, we got the coveted Maharatna status. By 2022, we expanded our mandate beyond our traditional power sector to fund the broader logistics and infrastructure sector, supporting the nation's wider development goals. In 2024, we launched PFC Infra Finance IFSC Limited, PIFIL. PFC is the first government NBFC which has established a subsidiary in IFSC GIFT City, Gujarat. This subsidiary will allow us to lend in foreign currency and access global capital. Our products and services, they are doing majorly project financing and also providing short-term loans, loans to equipment manufacturers, corporate loans, lines of credit, and we are also doing debt refinancing of commissioned projects. Talking about some of our key financials, as of September 2025, our loan assets were nearly 5.6 lakh crores, net worth 97,525 crores. Out of the loan assets of 5,61,000 crore, I would like to point out that our renewable portfolio is now almost 85,000 crores. Our net NPA has come down to a lean 0.37%. Talking about our financials, you can see that these financials reflect our financial discipline, our sustainable business model, and the quality of our credit appraisal. I would also take a moment to talk about the strengths of our company. Our expertise is not just in lending, it is in the power sector itself. So we are doing end-to-end financing across the entire power value chain. And our deep technical knowledge allows us to navigate the complexities of infrastructure and renewable energy transition. We are a AAA rated Maharatna PSU, which gives us high stakeholder confidence and also access to diversified funding sources at a competitive cost. Our consistent performance, which is marked by stable profitability and regular dividends, is a result of our rigorous credit appraisal framework. Apart from our lending operations, we are also a trusted partner of Government of India for its flagship reforms, which I'll talk about in detail in the upcoming slides. Continuing with PFC's strengths, PFC's Board of Directors brings together a strong mix of executive leadership and distinguished independent directors. So our board consists of 4 executive directors: our CMD, Madam Parminder Chopra, our Director Projects, Shri R.R. Jha, our Director Commercial, Shri Manoj Sharma, and our Director Finance, Shri Sandeep Kumar. Apart from our executive directors, we also have a government nominee director on our board and 5 independent directors. This mix of executive and independent directors ensures robust governance and prudent decision making. With respect to our lending operations, as I just told you, PFC is funding the entire power sector value chain from generation to transmission, distribution, and also the backward and forward linkages. Our core offerings primarily is project financing, so project term loans. And we are also giving short-term working capital loans, loans to equipment manufacturers, lines of credit, and debt refinancing of commissioned projects. We are also providing consultancy services through our wholly owned subsidiary, PFC Consulting Limited. Beyond our traditional power, as I just told you, we are also expanding into the broader infrastructure and logistics sector. So our diverse portfolio now includes funding for modern mobility solutions like electrical vehicle charging infrastructure, metro systems, airports, ports, roads, and waste management products. And looking toward the future of infrastructure, PFC is also looking at financing new age sectors like biofuels and data centers. Some of our recent achievements: we are now the largest renewable energy financer with an year-on-year loan asset growth of 32%. So our renewable energy portfolio is now almost 85,000 crore as against 65,000 crore during the last year H1. PFC is also trying to expand its global footprint by diversifying its funding sources through international partnerships. And in August 2025, we signed a euro 150 million loan agreement with Germany's KfW to strengthen India's power distribution sector. We also secured a landmark JPY 120 billion credit line from JBIC in early 2025 to support renewable projects. In September 25, more recently, we partnered with Export Finance Australia, EFA, and Citi to mobilize USD 180 million specifically for green infrastructure. And this was EFA's first ever financing initiative in India. So again, some of our key numbers. During H1 2026, our standalone profit was 8,963 crores, which represents an increase of almost 11% over our H1 last year's profit of 8,000 crores. Our disbursements during H1 26 reached approximately 86,000 crore, which is a 30% increase over the 66,000 crore disbursed during last year H1. Sanctions for H1 FY26 have reached approximately 1,53,000 crores. So loan assets and PAT net worth I have already spoken about. Our net NPA, as I just told you, is 0.37%. So this is about the consistent dividends which we have been giving to our shareholders. For the current financial year 25-26, we have already declared 2 interim dividends, aggregating to ₹7.35 per share. So our loan assets profile, first chart is about the segment mix. So you can see that we are basically funding to generation, transmission, distribution. Infra and logistics is right now not a very big part of our total funding, but we are looking to expand that as well. So our loan book in generation and distribution sector is around 86%, And we are, as far as sector mix is concerned, we are giving loans to government sector, which is state, central, and joint sector, and also the private sector. But as of now, primarily our loan book is inclined towards government sector, and 76% of our loan book is dedicated to the government sector. So numbers, wherever I am quoting any numbers, please note that these are as of 30th September 2025. So basically, this is showing the footprint of PFC across India. So PFC is funding throughout all the major states of India, and we have our footprints across all over India. The asset quality, our gross NPA is around 1.87%, and against which we have made a provisioning of 80%, bringing down the net NPA to 0.37%. I think here is the chart that I was talking about. Yeah. So you can see this is the chart of our NPAs, and we can see that gross NPA and net NPA both are consistently coming down. Our gross NPA has come down from 12.5% in the financial year 16-17 to 1.87%. And our net NPA has come down from 10.55% to 0.37%. So talking about our borrowings now, our outstanding borrowings as on date is, as of 30th September again, sorry, is 4,74,000. And as on 30th September, our domestic currency borrowing make up around 80% of our total borrowing portfolio, and our foreign currency borrowing is around 19 to 20% of our total outstanding debt. To protect against market volatility and exchange rate fluctuations, we have hedged 95% of our total foreign currency portfolio. As regards the domestic currency borrowing, 55% of our borrowing is through bonds and 20% through term loans. And you can see at point number 5, we also have outstanding 54 EC bonds of 10,000 crores. So I would just like to highlight that PFC is also authorized to issue 54 EC capital gain tax exemption bonds. And these are specific instruments which allows taxpayer to claim exemption from long-term capital gain arising from sale of immovable property. These bonds can be issued only by specific government-backed companies, and PFC is one of them. So PFC is also a trusted partner of Government of India for its flagship reform schemes. PFC serves as a nodal agency for many of Government of India schemes. It is a nodal agency for LPS rules, which are the late payment surcharge rules, to ensure that the generating companies receive timely payments, thereby stabilizing the entire power value chain. PFC is also managing the Prapti portal. This portal basically acts as an information portal wherein suppliers enter their invoice details and discoms enter their payment details. And basically it ensures invoice and payment tracking of power bills in the country. We, along with the REC, are also the nodal agency for RDSS, which is the Revamped Distribution Sector Scheme. PFC is responsible for facilitating the implementation of RDSS in 17 states and union territories. And through RDSS, the aim of Government of India is to reduce AT&C losses and also eliminate the ACS-ARR gap. PFC is also the nodal agency mandated by Ministry of Power to release the annual integrated rating and ranking of power distribution utilities. This report provides a comprehensive report card on the financial and operational health of 63 distribution utilities across India. This also helps in policy decisions and monitoring sectoral reform. So recognizing the need of the hour for cleaner energy and in alignment with Government of India objectives, PFC has been a cornerstone of India's energy transition, having supported almost 64 gigawatts of the nation's renewable energy capacity. So we are funding approximately 25% of India's non-fossil fuel installed base. And as I earlier mentioned, our renewable portfolio has touched almost 85,000 crores. We have also raised green bonds from the US and Euro markets and secured specialized non-thermal finance from Japanese yen market. Our efforts in this renewable energy area have been officially recognized at Reinvest 2024 where PFC was felicitated for its trailblazing contribution in helping India achieve its 200 gigawatt non-fossil fuel target. This award reinforces our status as a trusted financial partner for the Ministry of Power. Now, some specifics about our issue structure. So, we are incredibly proud to launch our 5,000 crore public issue of secured NCDs. These are secured, rated, listed, redeemable, taxable, and non-convertible debentures. The issue size is base issue of 500 crore with reissue option of 4,500 crore, aggregating to 5,000 crore. The tenor ranges from 5 to 15 years, and we have coupon payment options of annual, cumulative. And also, we are introducing zero coupon NCDs for the first time. The bonds are rated AAA by CARE, CRISIL, and ICRA, and the bonds will be listed on National Stock Exchange. So these are basically 5 series which we are launching. The coupon is in the next slide. I will just show you. So the coupon, we have 4 categories: institutional, non-institutional, HNIs, and retail investors. So for category 1 and category 2, the coupon ranges from 6.85 to 7.05%. For category 3, it is 6.90 to 7.20%. And for category 4, it is 7 to 7.3%. Again, coming back to the last slide, you can see that we have 5 series. So first is 5 years, which is with annual coupon payments. Second is 10 years, again with annual coupon payments. And third is our zero coupon NCDs. So zero coupon NCDs, these are CBDT notified NCDs, and they are issued at a discount. Then we have 15 years with annual coupon and 15 years cumulative. So I would like to just tell you briefly about zero coupon NCDs. So these are, as I told you, these are CBDT notified NCDs. They are subscribed at a discounted value. And the difference between the subscription amount, which is the application amount, and the maturity amount is taxed as long-term capital gains at whatever rate is applicable at the time of maturity. If I will just tell you some of the numbers. So if someone is applying for one zero coupon NCD, as per the category, they will have to pay around 50,000 rupees at the time of subscription. At the time of maturity, they will get 1 lakh rupees. For normal NCDs, the face value is 1,000 rupees and the minimum application amount is 10,000 rupees, which is 10 NCDs. I would also like to tell you about the 15 years cumulative option. So in this option, there will not be any annual coupon payments, but the interest will be compounded each year, and the entire interest amount along with principal will be given at the end of the maturity, which is 15 years. So rates, I have already pointed. I will just put the screen on hold for a few seconds so that you can see the rates. So in zero coupon NCD and the 15-year cumulative option, the coupon is not coming, but the yield is coming because there is no annual interest inflow to the investor. So allocation is also there. So maximum allocation is because it is a public issue, maximum allocation is proposed for retail and HNIs, followed by non-institutional and institutional investors. So these are our intermediaries. I would like to acknowledge all of them here. First are the lead managers, Novama, AK Capital, Tipsons and Trust. Our debenture trustee, Beacon. Our registrar, K Fintech. Our legal counsel in the issue was Trilegal. And our credit rating agencies, as I mentioned, CRISIL, ICRA, and CARE. So thank you so much. Thank you for your time and attention.
Yes, thank you. Thank you for that detailed presentation. We will open the floor to Q&A at the moment. There are a few questions which have come up from our from people attending. Why NPAs in the power sector? Who are the defaulters and action taken for recovery? Please also quantify the NPAs. You might have mentioned in the slide, but why NPA in the power sector? Who are defaulters and the action for recovery?
If you go long back in 2017, if you have seen the slide, then 17 our NPA was around 10%. And the reason was, as I think a lot of people will be knowing that, at that time was the thermal power projects has the certain problems because of certain issues. The issues was primarily because of this coal deallocation and sometimes some regulatory issues with regard to uh, certain related to land issues or certain environmental issues or certain issues with respect to the promoters. So there was basically the huge NPOs happened at that time in the thermal assets, and that was across the entire power sector, not related to PFC only. All the lenders who are funding to the those projects, and that basically problems arises in the private sector only, and the similar problem will not happen in the public sector. And as far as the resolution of this assets is concerned, there is a multi-tiered approach is being followed by the PFC. One is the approach under the IBC, where some cases has gone to the NCLT and got resolved. Certain cases still is going on. Right now we have the 22 projects which is under NPA and around consisting 10,500 crore. And out of that, 11 project is under the NCLT, another remaining project is under other processes. So as I told you, one is the IBC, other is basically is restructuring, wherever the project is feasible and can bring to the operations. So we have adopted that restructuring approach also. And where there is a possibility, we can also go for the one-time settlement. So there is basically the three approaches we have addressed. And after that, we have not seen any major NPA in our books. And you see, every year we are getting certain resolutions, and that's why our NPA is decreasing trend. Last year also we got two major projects resolved, the KSK and Lanco Mercantile. So they are the regions, and right now we are having sufficiently provisioning of 80% of the total stage 3 assets.
Okay, thank you. No, absolutely. For our audience, IBC is the Indian Bankruptcy Code, which the government and the country bought in 2016, a landmark thing, because then you could actually work out stressed assets in a out of the regular courts. The next question really is, what is the opening date of the issue? Maybe I can take that. Opening date is 16th January. And runs till much later, couple of weeks, with an early option of early close. You can also pre-apply on various platforms, even IndiaBonds. You can apply and already start queuing up, because I would like to see that. I would like to think that it'll have a very good interest from retail. So next question, what is the debt equity ratio and interest coverage ratio of the group, please?
In fact, debt equity ratio is 5+ basically, and DSCR as such, we are basically is not calculating the DSCR. Being a financial company, financial institutions, we are basically more stressing on the spread. So spread we are maintaining around 2.5, and that is basically within our guided trajectory, but we have giving to our investors.
Next question, on a standalone basis, financial assets at 5,90,000 plus crores, and total assets 5,96 as of September 30, have seen a significant growth in the last 2-3 years. What are the drivers of this growth, or strategic drivers that you think is this growth and will continue in future?
In fact, you see, PFC is basically the sector-specific company, and basically we are funding the private power sector across the India. And right now, as we have our CMDs also discussed during their address, right now in India has around 510 gigawatt the stored capacity. If you see the requirement of the country and the growing economy, so there's the expectation is around 7 to 8% growth will be there alongside with the GDP growth of the economy in the power sector as well. As per the ambitious plan of the government, now government is basically also transiting that from conventional to the renewable energy, and we are also aligning our goals along with the government of India. As we have, if you see, the government has basically now planning to put another 500 gigawatt installed capacity by 2030. And in near future, if you see, the total installed capacity is being targeted around 670 gigawatt by 2027 and 900 plus gigawatt by 2032. So that is basically if you see the ambitious plan of the government of India, the one part is this being a major funding agency in the power sector and having the substantial share of around 20 to 25%. So that is the one growth driver. And if you see the power growth driver is the pace of the industrialization, the pace of the way the population is increasing, the standard of life in this country is increasing. And second is basically now the government is basically putting the emphasis on the energy security as well. If we talk about energy security, when we come with this renewable energy, the renewable energy has their certain challenges also. The source of the renewable energy is basically not available round the clock. Like it's a solar. Solar is available during the daytime only. So that is basically the intermittent nature of this energy is now forcing to have the energy storage also. Battery storage is there, where the government is planning for the battery storage, the shifting to the pump storage as well. And now, after the Ukraine war, the whole world is now realized that the energy security is very important. The government is also planning to put another 80 gigawatt under the thermal capacity also by 2032. Likewise, the government is having the ambitious plan of putting the 100 gigawatt under the nuclear power. And that is again around 2047. So this is one thing. Then there is a emerging technologies also there. The net zero basically is the target of the government of India to be net zero by 2070. So those basically is green hydrogen is there, and transportation. The penetration of the EV vehicles in India right now is 7%. The government is aspiring to bring it to the 30%. So these are the areas which is basically these growth drivers for the Power Finance Corporation. Apart from that, government is also allowed us to diversify in the other infra also, up to 50% of the loan book. So they are just already shown in the slides. We are now tapping the other infra, including the port, airport, data centers, biofuels, waste to energy. So these are basically the total, I think, is areas which are the growth drivers for PFC.
No, absolutely. Very ambitious projects of the government from a strategic point of view, and PFC is rightly positioned to capitalize on that for that growth. So thank you for that answer. Again, a technical question: will ASBA be the applying platform? Yes, when you apply on IndiaBonds platform, you can apply through ASBA as well. So, question to you: has PFC ever received direct government support or capital infusion in any stress times in its history?
No. We are basically initially government put the equity of around 1,033 crore, and thereafter we have working totally on the commercial terms. So for any stress asset and other things, we never received any grant or any subsidy from the government of India.
Okay. One question again. This is a mass retail audience, so I'm sure you're used to it. It's not related to the bond issue. It's saying, why is the stock price declining last 1 year and NPA is reducing and financials are so robust?
I think you people are better in position to tell.
No. Very good answer, sir. One statement, zero coupon bonds are very helpful for retail investors like me. Thank you. Why is the coupon rate lower than the other options at 695?
That basically is a CBDT notified zero coupon bonds.
Yes.
And that gives the benefit of, as on today, if you hold that bonds for more than 12 months, you will get the capital gain tax at a lower rate of 12.5%. So
That's
that basically brings the yield, absolute yield will be, if you take the tax considerations, and that consideration is basically is a very individual specific and based on their tax liability at the time of maturity. So that gives the different basically dimensions if you calculate, taking into consideration the tax benefits.
no, absolutely. That's very good. Which private?
Another thing is it is basically subscribed on the discounted value.
No, absolutely. I think it's a very good instrument, a very interesting instrument. Now with the CBDT clarity, we've not seen that before, so it's a very innovative instrument for long-term investors. Next question, sir, and we have audience. We have just 5 more minutes. If you have questions, please type. Which private sector companies are clients of PFC? Large private sector companies.
You see, all the renewable energy is being maximum is being added by the private sector companies, and all the major private sector renewable energy groups are with PFC, whether it is a Adani, whether it is a Greenco, whether it is a Acme, and to give you a few names. So
That's fine. So we have a lot of large. Very interesting question. Large share of central state sector lending is protected structurally. 73.5% of outstanding loans to central state borrowers have an escrow mechanism. How does that escrow mechanism? Have you seen difficulty in receiving payments in the past from state and central government companies?
this I would like to share. In the state sector, we have the escrow arrangements, and so far we have not seen even a single incident where we have to go and invoke the escrow for recovery of our dues.
That's truly admirable. Thank you. I don't see any more questions. I think it was a very well presented corporate presentation, and especially of the bond issue is very, very clear. Just for our audience, I would like to repeat that the issue opens on 16 January. You can go online and start applying now. You can do individual or ASBA or by UPI. And there are 5-year, 10-year annual, 10-year zero, which I think is very interesting, my personal opinion, and the 15 years that you can subscribe to, especially, at the bond yields that there are, and interest rates are anticipated to be lower. So without that, without much questions, thank you so much, Power Finance Corporation team. Thank you, Shri Sandeep Kumar ji, Director of Finance, for attending the questions and answering them. Ms. Tabassum for your presentation, and all our investors and audience. This entire session will be available on YouTube in a few hours' time. And please do take a look at Power Finance Public Issue. It's a rare issue, and try and subscribe if you find it useful. With that, we'll come to the end, and thank you very much for attending today, everyone. Thank you.
Thank you for all the participations, and we are looking forward to very good support from you people. And our team is here for any further queries or any other issues which we feel we requires our help.
Perfect. Thank you. We'll close the conference now.
Thank you.
Thank you. Thank you.
Municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.